Hello everyone, this is CA.Tejeshwini Chiranjeevi. In this video, let's try to understand about the deductions from the GTI CA final. Okay, certain very important questions we are going to cover. So the first question is from the test your knowledge, question number 1. Mr. Srinivasan, aged 61 years. The following particulars for the year end were provided. Okay, life insurance premium paid 15,000, where the capital sum assured was 2,30,000, and the insurance policy taken was as on 31/3/2012. Contribution to PPF was 40,000, but not in his name. Very important point, but in the name of his father. Tuition fee paid 8,000 each. That is for two sons. 8,000 into two. Pursuing a full-time graduation course in Kolkata, India. Tuition fee for her daughter in for a PhD in the Kellogg University, USA, not in India. Housing loan repayment, principal repayment 32,000 to Axis Bank. However, this property is under construction as on 31st March 2025. Principal payment of the housing loan taken from a relative is 70,000. The property self-occupied situated at Pune. Deposit under the senior citizen savings scheme is 15,000. 5-year deposit is 50,000 in the post office. Investment in the national savings certificate is 70,000. Compute the deduction which is eligible under the appropriate provisions of section 80C. He shifts out of, that is, he opts to shift out of the default tax regime under section 115 BC. So this question, what are they asked me? See, before solving any question in your exam, first you should make sure that you are reading the question in a plain language first. Identify what is that they've asked. In this question, they have asked you to compute the eligible deduction under section 80C. So you're just going to find that. Okay. So in this section, please remember this fellow is of the age 61 years. That might be important moving forward. See, life insurance premium paid 15,000, where the capital sum assured is how much? 2,30,000. See, this policy was taken as on 31/3/2012. So does it not mean if the policy is taken prior to 31st March 2012, before 1/4/2012, that is nothing but on or before 31st March 2012, you will be eligible to take 20% of the capital sum assured. So how much would you be getting? The 20% of the capital sum assured, 2,30,000 into 20%. How much would you get? See, 2,30,000 into 20%, that is nothing but 46,000. This 46,000 is the total maximum that you can take. However, the life insurance premium paid is only 15,000. Won't you get the full amount? Yes, you will get the full amount. That is, the entire 15,000 will be eligible for what? Deduction. Entire 50,000 is eligible for deduction under section 80C. Contribution to PPF 40,000 in the name of the father. See, if name of the father was not given, it was just mentioned that contribution to PPF you would have taken, yes. But is the PPF contribution in my name? Is this PPF contribution in the name of the spouse? Is in the name of the children? No, it is in the name of the father, which is not allowed under section 80C to be eligible for the purpose of deduction. So, if the PF contribution is being made in the name of the self, in the name of the spouse or children, only then it is allowed as deduction. But it is allowed, but this is in the name of the father, which is not allowed as per section 80C. So this 40,000 you can't take it as for the purpose of deduction. PF contribution in the name of the father, it is not applicable under section 80C. So it is nil. Okay. Tuition fee payment of 8,000 each for two sons pursuing full-time graduation course in Kolkata. See, remember under section 80C, wherever the tuition fee payment is being question is provided. Understand, you should keep 2 points in mind. One, the maximum deduction is given only for two children. Second point, they should be studying full time in India, not outside India. If they're studying outside India, will they get any rupee, even a single rupee as a deduction under section 80C? No, they will not get anything if they're studying outside India. That has to be a full-time course, full-time education, and it should be maximum of two children, and it should be in India. Very, very important point. So 8,000 each for two sons will be 8,000 into 2, 16,000. Is 16,000 allowed as deduction? Yes, 16,000 will be allowed as deduction. 8,000 into 2, that is nothing but 16,000 will be allowed as deduction. Next point. Next point. See, okay. Housing loan repayment, principal repayment of 32,000 to the Axis Bank. See, these points goes along with the housing loan principal repayment. Okay. Remember, under section 80C, wherever this housing loan principal repayment point is coming in, you can take the principal loan repayment as your deduction only if the property construction is completed within 31st March 2025. But under section 80C, the point is been provided that the property should be allowed or showed, or that income from the property should be shown under the income from house property. Yes, you will get, basically, suppose let's consider you have constructed a building. In that building, you are getting rent of 4 houses at 10,000 each. So 40,000 should be subject to tax per month, multiplied by 12. You guys can do it. It should be allowed, or it should be provided for tax in your income from house property, right? Only in that case, if you are making a principal repayment, they will be allowing you the deduction. Okay. What if you are not able to show that income under the head income from house property because it is a self-occupied property? However, see, if it was not a self-occupied property, if it was a rental property, you would have shown that property under the income from house property for the purpose of your taxability, right? That is also considered. Even the self-occupied property, not income from house property, it should be eligible for the purpose of showing that income under the income from house property for the purpose of taxability. Long story short, see, the property should be completed before 31st March 2025 in this case. Whichever year you are taking the house loan principal repayment as your deduction. The construction of the house should be completed before previous year, whichever year you are taking it. Long story short. Clear? So tell me, this 32,000. Can I take this 32,000? The property is under construction. No, I can't take it. One more important point under the same principal housing repayment, you should take it from a bank, from a cooperative society, from a financial institution, or from a company wherein they are lending you the money for the purpose of construction. Okay, you can't take the money from a relative and say that no, 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 I'll take the principal repayment as my deduction. A relative is not considered as the eligible installment payments wherein you are making. That is not allowed under section 80C. So from a relative you are taking a loan, even though the property is construction completed, relative taken from a loan, you can't, it is not eligible under section 80C. In this case, it is not, construction is not completed. The property is under construction. It means construction is not completed prior to 31st March 2023. So it is not. Okay. See here. Housing loan repayment, house property not constructed before, and the loan is from relative. Hence, you can't take any deduction under section 80C. Very well. Well. Deposit under the senior citizen saving scheme. People, all of us know senior citizen saving scheme. Whatever amount you deposit, maximum of subject to 50,000, 1,50,000 under section restriction which is provided. But under section 80C, can you take? Yes, absolutely can take. 15,000 is allowed as deduction. Eligible for deduction under section 80C. 5-year deposit in an account under the post office time deposit scheme. Is it allowed as deduction? Yes, it is allowed as deduction. 5-year saving. The condition is that it has to be it's a fixed deposit for 5 years. Investment in national savings certificate. How much is it? 70,000. Is it allowed as deduction? Yes, national savings certificate is considered as eligible deduction under section 80C. So compute the deduction eligible under section 80C. We have considered the same and we have discussed each part over here. The total is 1,66,000 which is eligible under section 80C. However, we have a restriction which is giving a maximum cap of 1,50,000 under section 80CCE. Restricted under section 80CC. Okay. So this is your question. So or you can see all the working note points here. Simple. Okay. See question number 2. X Limited has 2 units. Okay. Unit 1 and unit N and V. This, what is the story behind this? Is see unit 1, unit N. This is engaged in the power of business of power generation, and it has made a profit of 100 lakhs in AY 25-26. See X Limited. This X Limited has 2 units N and Y. Okay. Now let's continue the story. X Limited this claimed depreciation of 1,20,000 on windmill against the profit of 100 lakh from the power generation business. Next, which is eligible for deduction under Section 80IA. Unit Y engaged in the manufacturing of wires, it's a non-eligible business. So now tell me, Unit N, is there any deduction under Section 80IA? No, there is no deduction under Section 80IA here. But do you get the 80IA deduction here? Yes, you'll get the 80IA deduction under Section under Unit N. Okay, simple. And this had a business profit of 70 lakhs, which had a business profit. See, 70 lakh is the business profits for Unit Y. 120 lakh claimed depreciation of 120 lakh against the profit of 100 lakh from the generation. This story is N. Okay. Now let's move forward. The loss of 20 lakh, whatever you are getting, that is 120 minus 100, which you are taking is 20. This loss of 20 lakh, that is the balance depreciation, is not set off pertaining to Unit N, was set off against the Unit Y. See, what have they done is that basically Unit N had a profit of how much? 100 lakhs, but it had claimed a depreciation of 120 lakh, so it has resulted in a net loss of 20. Unit Y, Unit Y has a profit of how much? 70 lakh over a year. Now what happened? Balance depreciation is not set off against the pertaining to the Unit N, was set off against Unit Y. So now what are they doing? This 20 lakh, whatever the loss they have, they are trying to set off this against the 70 lakh. And the assessing officer was of the view that the depreciation relating to the eligible business under Section 80IA cannot be set off against the non-eligible business. For 80IA, N is eligible business and Y is non-eligible business because this is into windmill, that power generation and windmill kind of thing. And N is a normal manufacturing business. So this is eligible for 80IA. This is not eligible for 80IA. This has a loss of 20 lakh rupees depreciation, which they want to set it off against the Y as per the company. The assessing officer is that no, you can't do that. That is what the entire story is about. So now what are they doing? Hence, the unabsorbed depreciation should be carried forward to the subsequent years to be set off against the eligible business of the income of that assessee. This is what the assessing officer is stating. Examine the correctness of the actions of the assessing officer. See, first of all, Section 80IA speaks about the 100% of the profits or gains from the business or profession. So, specifically from this business which is eligible under Section 80IA, you can set that, you can take 100% of the profits as deduction. That is, you need not pay tax as per Section 80IA. That is what they are stating. But here, there is a slight confusion which the assessing officer has made. He has mixed the set of provisions and he has mixed that 80IA provisions together and he has given some solution. So now let's see whether the assessing officer is correct or wrong. See, this has been seen in the case study, that is Swarnagiri Wire Installations Private Limited, CIT versus Swarnagiri Wire Installation. That's the Karnataka High Court observed that generally accepted principles basically for principle that the deeming provisions of a particular section cannot be breathed into another section. That is, the one section cannot be merged into another section. Therefore, the deeming provision contained under 80IA cannot override the provisions of Section 70. See, whatever is stated in Section 80IA but should not be merged with Section 70, this section cannot override the provisions of the Section 80IA cannot override the provisions of Section 70, wherein Section 70 speaks about the set off and the carry forward of the losses. Okay. In this case, X Limited had incurred loss in eligible business. We all know that on account of depreciation of 120 lakh, that is nothing but 20 lakh being the net depreciation loss. Section 80IA becomes insignificant over here, people, because I've told you, Section 80IA comes in picture wherein 100% of the profits and gains from whichever eligible businesses, you will get the deduction. And we are not even speaking about the profits here. We are speaking about the loss, and the loss set off portion is coming in picture, not 80IA. being in relevance. So section 80IA becomes insignificant since there is no profit from which these deductions cannot be claimed at all. It is therefore that section 70 which comes into play, whereby an assessee is entitled to set off the losses from one source of income against the other source of income under the same head of income. See, basically, section 70 provides where whenever you are doing the set off of losses from one income that is within the same head from one business to another business, yes, it can set off the 20 lakh of depreciation over the income which you get from 70 lakh from uni. Okay, from non-eligible business. So the net profit of 50 lakh would be taxable in the hands of Mr. X under the business of unit Y. It will be taxable, however. See, however, once the set off is allowed under section 70 against income from other source under the same, it is not possible in any subsequent year the losses to set off as to be first deducted while computing the business profits under section 80I in the subsequent year. Accordingly, in A by 26-27, the net profits of unit 10 has to be reduced by 20 lakh for computing the profits and profits eligible for deduction under section 80IA in that year. The action of the assessing officer is not permitting the set off of the losses against the non-eligible business is totally not correct. Clear? So from the third question, question number 3 from test your knowledge. From the following details, compute the total income of Mr. A, Mr. B and Mr. C for the AY 25-26 if they shift out of the deferred tax regime. See, basically this is a very easy question. It looks very lengthy, but it is very, very easy provided you know all the crisp, small points of section 80, 80C, 80G and 80GGC as well. Okay. See, basically what have they asked you? They have asked you what is your taxable total income basically for Mr. A, Mr. B and Mr. C. They are shifting out of deferred tax regime. That is, they are expecting or asking you to do as per the normal provisions. Salary, interest income. You have two. Both have been provided. Particulars of other investments and things for PY 24-25 are being provided in the question. Deposit in public, that is nothing but the PPF by Mr. A. 1,50,000. Tell me, people, is 1,50,000 allowed as deduction under section 80C? Yes, obviously. See, maximum eligibility we'll see later. But however, is it provided? Yes, it's provided. 1,50,000 is eligible for deduction. Yes. Life insurance premium which is paid by Mr. C, the details of which are below. Life insurance premium coming under section 80, 80, 80C. Life insurance policy 80C, medical insurance policy 80. Okay, 80C. For self, where the policy was taken 31st March 2012, maximum of 20% can be taken. Sum assured of 20%, maximum of that can be taken for the purpose of deduction. So can I take entire 50,000? Yes. 2,48,000 into 20% you do, you will get more than 15,000 only, no? So maximum 50,000 can you take? Yes, you can take the full. 11/6/2018. How much can you take? You can take 10% of it. So and for the spouse here, it is 10%, right? So for the spouse, where the policy has been taken on 11/6/2018, the actual capital sum assured is 1,25,000 into 10%. So the restriction would be up to 12,500. Understood how you got 12,500? Only 10% of the capital sum assured is allowed as deduction, eligible for deduction under section 80C if the policy is taken prior to 1/4/2013 over there. Okay, after that, whatever is taken prior to 1/4/2023, it remains same. Policy is taken in between the same period. 10% for others, 15% for the handicap. That is the people who are coming under section 80U and 80DDB disability. They can take 15% of the capital sum assured. That is nothing but 30,000 over here. But how much they have paid? 32,000. How much is allowed as maximum is 30,000. Is maximum allowed for Mr. C in order to take the deduction. Here 15,000 for self, for spouse 12,500 and for the handicap son 30,000. So the payment of medical insurance premium by the following persons to ensure their health: Mr. A, Mr. B and Mr. C. Age 55 years 30,000, 52 years 15,000, 48 years 20,000. Mode of payment is also given. See, very simple. Mr. A has paid 30,000 in account pay check. Yes, is it allowed? Yes, obviously it is allowed. Mr. A is age 55 years. So 25,000, maximum of 25,000 is allowed. If he was a senior citizen, then you could have taken entire 30,000 as deduction, because however 50,000 would be allowed as eligible for deduction. But in this case, it's a non-senior citizen. So maximum of 25,000 is allowed. This fellow has paid 15,000. Okay, he's 52 years, but he has paid in cash. Medical insurance premium, whenever it is paid in cash, it is not allowed as deduction. In a form other than cash, yes, it is allowed as deduction. In form of cross check also it is allowed. You should not be paying in cash. The department doesn't want to entertain in cash. That's it, nothing else. So cross check here is how much? 20,000. Mr. C, age 48 years, amount in 20,000. Cross check is how much? 20,000. So this is the total. So how much can Mr. A take? 25. Mr. B nothing. Mr. C, he can take maximum 20,000. Mr. B paid interest on loan taken for purchase of house in which he currently resides, claiming under section 23(2) in respect of his house. He does not own any other house. So interest on loan, how much they are claiming is 2,20,000. And this is a self-occupied property. So can I say, whenever there's a self-occupied property coming in, all of us know the NAV, the GAV of the self-occupied property is zero. The municipal taxes will not be allowed, so it is also zero. NAV for self-occupied property will always be zero. The only deduction which you can get is section 24B, that is interest on the loan for that matter. How much is it? 2,20,000. But the maximum deduction which is allowed over here under section 24B for self-occupied property is only 2 lakh. So can I say this is resulting in income from house property of how much? It's nothing but loss from house property of how much? 2 lakh. Can you claim this as deduction for the interest adjustment? Yes, you can do that. We will do that in the following ways. See here. Income from house property, this is nothing but the loss from house property. However, I'm just writing it as income from house property because it's coming under that head. However, I've given it as loss. Can you set this off against the salary? Yes, obviously you can set this off under the head salary. The more information about that is there in your set off and carry forward chapter. Repayment of principal amount of loan taken for the purpose of the said house. That is how much? 1,70,000. Repayment of principal amount of loan taken for purchase of the said house. For this house, repayment of this principal payment is there. Can I take the deduction? Yes. 1,70,000 will be eligible. But we will see how much is the actual deduction that they can take under section 80C. This also comes under 80C, remember. Contribution of by Mr. A by check to National Children's Fund during the year, 30,000. National Children Fund is 100% eligible for deduction under section 80G. This comes under the category 1 only. So entire 30,000 is available as deduction. See, you can clearly see here, salary is given in the question, income from other sources is given in the question. This is provided based on the conversation or the discussion which we had here. GTI is provided. PPF, where is this PPF recorded? See, this PPF is recorded here, 1,50,000. Life insurance policy premium paid 57,500. How did you get 57,500? You do the total of this, you will get 57,500. Okay, this is 57,500. Principal repayment, I told you, no. Principal prepayment, you can take the entire 1,70,000 a year. But however, you can take a maximum deduction of only how much? 1,50,000. So that is fine. We can write a note here. 1,70,000 restricted to 1,50,000. Okay, just write a note. You can, and you will be getting full marks. But whatever points we are discussing now, everything along with the solution need to be written in the form of working note. Otherwise, you will not be allotted with full marks. Even though whatever the calculation you are doing, you are writing your total income to be correct also, but still you will not get your full marks if you don't write the working notes. Remember that point. Okay, ATD also we saw the point. No, 25,000 is provided. In this case, where is it? 25,000 nil and 20,000. That is what we have recorded here. How much is allowed? Under section 80G, 30,000 is allowed as deduction. See here in case of 80GGC, This Mr. B, this fellow alone, not A and C, Mr. B is making the payment for some political parties. That is donation to BJP by cross check, donation to Electoral Trust by cash. Can you make the contributions or the donations to the political party? Obviously, yes. Will you get deduction? Yes, that is 8 section 80 GGC. Donation by way of cross check. This is in the way of other than cash, right? So, will you get the deduction? Yes, you will get the deduction. You will get the deduction here. So, cash donation which you have made excess of 2000 rupees, you will not get any whatever the donations which you have paid, you will not get any deductions for that matter. So, what you will do now, you are going to add all the deductions whatever you have got, and then out of your total income from the GTI whatever you have received, you will subtract your total deductions, and then you will get your total income. Clear? And this all this point working notes which has been recorded here will be it's already provided. Okay. So whatever the information which you can find in your sheet, whatever the sheet which you are using now, everything is available in the Telegram channel. The link will be provided in the description. You can get it from there. Okay. So the next question, that is, following issues have been raised by Navi Limited in connection with its eligibility for claiming deduction under Chapter 6A for the consideration and advice for the assessment year 25-26. Now, this Navi Limited operates two separate undertakings. One undertaking is eligible for ATIB and the other undertaking is not eligible. It's another business. If the eligible undertaking has the profit, the eligible one now has a profit and the another non-eligible other undertaking which is not eligible has a loss. Should it claim deduction? That is, whatever the 100% of the profits and gains from that business is available as deduction, should it claim offsetting off of the loss or against the profit of the eligible undertaking is the question. See now, ATIB, which provides the provisions which is contained under section 80I, it states that whatever the profits you have, take the deductions from that. Okay, that is the profits and gains should be taking the deductions as if this was the only source of income. Without considering, okay, it has another business, this is the only source of income. Keeping that in mind, you have to take the deduction. So, Navi Limited can claim deduction under section 80IB on the profits eligible. See, this is the very important point here. Without considering the set off of loss suffered in the other undertaking. You should not consider the other undertaking exists. You should first make sure that the deduction has been taken in the eligible business unit. It may be noted that the aggregate deduction in the chapter 6A, however, cannot exceed the GTI. However, if the GTI is 100, just an example, if the GTI is 100 and the deduction is 120, you can't claim 120 as the deduction. You have to keep it till 100 only. That's what they're stating. And this you could see in the case of Reliance Energy Limited. In this case study, you can see the point. The next point is, see, it's profit from one undertaking, that is a second situation. Northeastern states, which is eligible for deduction under section 80IE, includes the sale of import entitlement. This profits from the unit of northeastern states, which is eligible under section 80IE, includes the sale of import entitlements, duty drawback, and interest from the customers for the delayed payment. It includes three. It has other income also, but it includes these specific points are included. Is it permissible to claim deduction under section 80IE on these items? See, there are two case studies with regarding to these three items being mentioned. See, what are those case studies? See, where the GTI of the SSC includes any of the profits and gains undertaking referred to in section, they shall be allowed in computing the total income of the SSC deductions from such profits for such number of years as specified in the section. Basically, they have stated 2 points here. That is, CIT versus Sterling Foods and Liberty India versus CIT. It was held that sale of the import entitlement, duty drawback, whichever you have here, it cannot be constructed as income derived from the undertaking. They have made it clear in that case law, this sale of import entitlement and the duty drawback cannot be considered as constructed as income derived from the undertaking. Therefore, such income cannot be included in computing the income for the purpose of deduction under section 80IE. So, you can't take it. However, there is another one which is left. If you can see, interest from the customers for delayed payment. So, interest income from the by an undertaking on the delayed payment for that matter, this shall be treated as income and derived from the undertaking, and therefore same can be included in the deduction. That is, this can be treated as income derived from the undertaking, and this has been seen in the court. This can be seen in the case law, Patella, Codgen Industries Private or Limited versus CID. Okay, the important point you can highlight here is sale deed draw duty drawback cannot be constructed as income under this one. That matter. Clear? Now the fifth question. Pure cooperative society, cooperative bank, a cooperative society having its area of population confined to Gubbi Taluk, and the principal object of which is to provide the long-term credit for the agricultural and the rural development activities, has received the following amounts during the year ended 31st March 2025. Interest income amounting to 1 lakh from its members on loans advanced to them. Interest income amounting to 1,50,000 on deposits with other cooperative societies. Rent income of 2 lakh from letting out its godown for storage of commodities. They have basically these three incomes. Okay. Pick your cooperative bank, seeks your advice in order to say what is the eligibility of the deduction that is available for EY 25-26. See, section 80P states that whatever the deduction that you can take in the by a cooperative society. See, section 80P shall not apply to any cooperative society other than primary agricultural credit society or primary agriculture cooperative agricultural rural development bank. Basically, the cooperative bank which has been set up, it should be basically for the primary agricultural credit or agricultural development for agricultural and rural development for that matter. See, this defines primary cooperative agriculture rural development bank to mean society having its the the area of its operation specifically to a taluk, and the principal object is to provide the long term credit. That is how they define the cooperative agricultural rural development society. Okay, see here you can see section 80P is applicable for the cooperative bank, that is your primary agriculture cooperative society and this rural development bank for that matter. How do you define this is that they should be confined to a taluk, and also they should be with regarding to long-term credit for agriculture and rural development. If you can see that this PQ Cooperative Limited, this is confined to Gupi Taluk, and primary objective is to give long-term credit for agriculture and rural activity. So here they absolutely become 100% eligible for claiming the section 80 PM. So, PQR Limited Cooperative Bank, this is an primary cooperative agriculture rural development bank for that matter as per the definition. So, you can give the reason because it is confined to Gubi Taluk and it's also with relating to the long-term credit for agricultural thing. Hence, interest of 1 lakh with regarding to the members, that is banks on loans and the bank from deposits, bank from letting out its go down for storage of commodities. All these things have been considered for the purpose of your deduction under section 80. Thank you.